welcome to Market Wrap, a weekly update on equity markets and outlook for next week with Mr. Pankaj Pandey, Head Research, ICICIdirect. Very good evening, Pankaj, and thank you for joining in.
Hi, good evening, Gitu.
So some relief for the markets this time. Benchmark rebounded sharply in the trade on Friday. Sensex Nifty post biggest single day gain in 4 weeks. So after that rout that we saw in the past few weeks, the markets are now gaining some bit of a confidence. Pankaj, Nifty ended up 0.75%. Sensex gained nearly half a percentage points. Bank Nifty closed over 3% gains in this week. Nifty managed to close very close to 17,600 mark. So what next for the market?
Well, Gitu, I think there has been a change in sort of bullish sentiment in the market. Largely, I think concerns around Adani group of companies have sort of subsided, and that sort of lifted the market sentiments. And I think markets were oversold, especially we have seen one of the biggest short coverings in banking stocks, be it private banks or be it PSU banks. So as a result of that, we've seen one of the highest gains in last few weeks. And I think we've seen something similar patterns even historically also. So markets have corrected 9% from the top. And we have seen this 3 months market being in a sort of a correction mode. And whenever we have seen instances of that historically, typically in the fourth month, we see a bounce of 5-6 odd percent, if not more. And eventually market heads towards making a new high. So our sense is that with the kind of a relief bounce coming in, one because of improving sentiments on Adani group of stocks and banks, overall our sense is that market might still be in that range of say 17,200 to 800. But if it manages to close above 17,800, then I think 18,300 is very much on the cards for this particular month.
Pankaj, if that is the case, so which are the sectors that you think should benefit the most?
So overall, the odds are in favor for a rally because markets were oversold. So I think banking is one of the sectors where we have seen a lot of short positions. So banking obviously will find favor, and I think we have Fed inflation data expected in next 2 weeks. So probably we get a softer print, then IT is another sector which can sort of contribute. Otherwise, capital goods, infra, and metals are looking good for various reasons. So capital goods and infra because of the domestic capex cycle, and metals largely because the Chinese growth has started chugging along. So that is sort of helping metals in some way.
But the star performers this week were the Adani Group stocks. You name them. Every stock has seen a very good bounce back from the lows that they touched earlier this week. So what is your take on the Adani Group stocks right now? Are the worries really over?
So I think this stake sale is obviously going to enhance the liquidity of promoter entity and will sort of definitely allay some of the market concerns. And we've seen promoters raising nearly 15,400 crore, and that's a sort of a sizable amount across group companies, be it Adani Ports or be it Adani Green or a number of other names. I think the commitment of a large fund signifies the confidence of the investor in companies' current and future business prospects. And so from that perspective, all these companies which have where the stake sale has happened, I think are key companies from an infrastructure perspective. And so overall, this definitely sort of helps the Adani sort of group of companies. But since we have only limited coverage on the companies, I can only talk about two companies. One of them is obviously Adani Ports. Here our target price is 800. This company has got 25% market share in the port cargo movement. And by 2030, they want to be there in ports, in container train operations, warehousing, last mile connectivity. So they are looking to become one of the largest integrated players. And balance sheet wise, we on a standalone entity, we don't have much of a concern because it's having a free cash flow for 5%. So that way, no major concerns there. And the other one is Ambuja Cement. Here our target price is 500. Now, this company has got a capacity of nearly 32 odd million tons. And combined with ACC, the promoters, the expectation is that the capacity will be taken to 140 odd million tons, so which is a CAGR
Mhm.
of 16%, which is double the growth rate of what we would see for a cement sector. And then there are efficiencies which are expected to the tune of say 200 to 300 rupees per ton, because the group as a overall is quite sort of ingrained in logistics as a space, so that is going to sort of benefit over a period
Mhm.
of time. So I think Ambuja and Adani ports, I think, are two bright spots for me within the Adani group.
Mhm. Pankaj, would it be right to enter these two stocks at current levels because we have seen a decent bounce back in both the stocks?
So I think, like I said, we are comfortable in both the companies, and they are still sort of down from their previous peaks. So from that perspective, I think even at current levels, we feel that the stocks are attractive. But since we
Mhm.
have seen a good bounce, probably a day or it might take one or day to sort of cool off. So I think people can wait for that. But
Mhm.
I think both these companies are looking good with minor corrections.
Mhm. Let's talk about the Chinese PMI data, which is not reliable, but yes, the Chinese authority themselves were shocked with the data that they saw as far as the PMI is concerned. So, what is your view on the metal space, which is supported by Chinese data, in fact? Uh, uh, which are the counters that you would really bet upon?
So Chinese PMI, obviously, like you said, is a number always can be taken with a pinch of salt. But I think broader trend is that the Chinese economy is bouncing back, and China is one of the biggest players on the metal side. So obviously, any business activity in China which is on a uptrend is a positive news for metals. And this is the highest reading which we have seen since April, say 2012. Now, we have seen Chinese metal prices inching up by 5% in the month of March. We have seen Indian players taking a price hike of, say, nearly 1,500 to 2,000 rupees per ton.
Mhm.
And so, obviously, this augurs well for our metal companies. And we have
Mhm.
seen Indian exports rising 33% to about 0.75 million tons. This is the
Mhm.
highest number in terms of exports what we have seen in the last 7 months. And
Mhm.
obviously, it has positive implications for metal as entire pack. What we prefer is Tata Steel with a target price of 130. So our sense is that you'll see quarter on quarter realization improving by say 1,400 to 1,500 rupees per ton. And then
Okay.
coking coal prices are also expected to decline by $10. So obviously
Mhm.
it will be a beneficiary of both the raw material prices cooling and the price appreciation being taken or price hikes being taken.
Mhm.
And that should get reflected in Q4 numbers. Another company what we like is Hindalco. Now, Hindalco also for any aluminum producer, coal is a big cost component, and we have seen, or our sense is that the cost of production for Hindalco is likely to come down by 5% in Q4, and that should
Okay.
sort of help them deliver better margins. Hindalco is another company with a target price of 520 is what we would prefer in the metal as a overall space.
Mhm. Pankaj, but the worry is if China recovers fast, then the crude prices will also go up. If that becomes the case, how do you see India placed with crude prices on the higher side?
So, like you see in most of the headlines, we are one of the biggest buyers of Russian crude, which is obviously coming at a sort of a cheaper price. And we
Mhm.
have seen trade deficit also sort of coming down last month, largely because the crude oil bill is sort of coming down. So I
Mhm.
think till the time world is sort of polarized and we really do not have a solution to this Ukraine issue, I
Mhm.
think one can or safely assume that India will keep buying one third of their crude oil from Russia and probably at a cheaper cost, and that might sort of continue to sort of keep us insulated to some extent from this global crude oil price volatility.
True. Uh, Whenever there's volatility in the market, so we move to defensives, and pharma is one of the defensive which has seen some bit of attraction, not much, but this space is now looking poised for moving higher, maybe gradually. So, what is your view on the pharma space right now?
So in pharma, when you sort of look at exporters, so there are some companies which are benefiting from specialty products, but most of the issues are still sort of lingering on the global side or for the exporters. But I think when you sort of look at the domestic pharma space, that's quite resilient. And overall, this sector or domestic segment has been growing at low double digits, and that is what is the expectation of 10 to 12% growth for domestic pharma space. Now,
Mhm.
here there are a number of things which are panning out. One is most of the companies are increasing their medical representative field force. And say for a company like Sun Pharma, I mean, they are adding about 1,200 MRs this year to their total tally of 11,000. So that's a
Mhm.
quite a sizable addition. Then there are
Okay.
about 500 drugs which are going to sort of go off patent. So we have a drug called Paimada, so which is a 500 crore kind of a drug which has been growing at 30%. So when some of
Mhm.
these patent expire for some of these products, then typically the opportunity gets opened for a lot of domestic players. Then I
Mhm.
think pricing growth is another which has been very stable for domestic. So we have seen 5% kind of a stable pricing growth domestically. So a
Mhm.
combination of this is definitely going to help the domestic pharma entities. Now,
Mhm.
we don't have pure domestic pharma entities, but overall, our sense is that there's some players who will sort of benefit. So you have Sun Pharma, which gets 32% of their revenues from domestic. Again,
Mhm.
here the domestic revenues are expected to grow at 12%. You have Cipla again, where the domestic contribution is 45% and expected to grow at 12, 13 odd percent. Ajanta Pharma is another which gets about 31% of the revenues, and the domestic growth is expected to be 13%. We like some of the MNC names like PNG Health, largely because it is one of the biggest player on the vitamin side. 60% of the revenue is coming from vitamins category, and that is
Mhm.
expected to grow at 10%. So I think these are some of the names in case the market turns volatile. I think these are the names or good hiding places in the current market volatility.
Mhm. Talking about the auto numbers have been in line with expectation, with CV seeing a bit of good traction. But Pankaj, with higher rate of interest, which supposedly we do not expect them to come down very fast. Do you expect these kind of volumes to get hurt a bit in coming months? And what is your view on the entire volume scenario that you see for the month of Feb?
So one is, I think, when you sort of look at the Feb numbers, so Feb obviously has 28 days, unlike 30 days or 31 days, what you see. So naturally, month on month, I mean, you're getting 6, 7% kind of a lesser number of days. So volume has to be seen from that perspective. Now, when we sort of look at PV as a segment is looking very good because we have about 7 lakh plus kind of a booking.
Mhm.
Half of them is with Maruti. Maruti number might look at relatively flat on a month-on-month basis, but considering the lesser number of days, these are good set of numbers.
Mhm.
So Maruti did well on the PV side. Tata Motors did quite well on the CV side. So they have seen a 10% volume growth on the month-on-month on the CV side. Good
Mhm.
part about them was that the within PV volumes, the electric vehicle segment crossed 5,000 kind of a number on a monthly basis. And I
Mhm.
think tractor is one segment which continues to sort of surprise. So we have seen Mahindra and Mahindra delivering 26% YY growth. So I think that is one segment which is sort of continuing to do well.
Mhm.
Two-wheeler is again more of a mixed bag. I mean, last month, Hero Moto numbers were quite particularly bad, so which is why on a lower base you are seeing about 10% kind of a growth for Hero MotoCorp. So that's a space which is really not sort of performing on expected lines. I think
Mhm.
rest of the other three segments are doing quite good. And number wise, I think Maruti, Tata Motors did a good set of numbers. Maruti we like largely because now the company is focusing more on UV as a segment, and they're
Mhm.
not sort of expected to lag big in terms of EV runway.
Mhm.
Mahindra continues to do well because they've got some 43% odd market share on the tractor side. The UV portfolio continues to do well. Tata Motors CV continues to do well. Electric PV business is doing well, so that is another. And Ashok Leyland also is sort of doing very well. So I think so. All these three four companies is what we would usually prefer within the OEM space.
So for now, you don't see high rate of interest hurting the auto volumes, right?
Actually, yes, because when you sort of look at the kind of bookings, what companies have got 7 lakh plus, and most of these models are higher end models. So it does not look like that there is higher interest rate is sort of dampening the demand. And something similar we have seen in real estate also. So
True.
that way, I think the higher interest rates are still not hurting the demand.
Talking about Axis Bank and Citibank deal, how do you see that benefiting Axis in the medium to long term?
So one is obviously when you look at from the deal size, so this deal is about 700 crores lower than what was previously reported, but there is a catch here because when the deal was signed, it was expected that with the perspective of 3 million customers coming into Axis Bank fold, now the numbers is lower at about 2.4. And then there'll be an integration cost of 1,500 odd crores. And I think the expected benefit could be lower by 800 to 850 odd crores also in terms of lower profitability because of this cost. But I think a good part is that the Axis is getting a very large, affluent, and profitable consumer franchise. And so, which is why I think, and this deal is sort of happening a month prior to the anticipated deadline. So that way,
Okay.
I think things are moving in sort of right direction for Axis, and which is why this is one of the stocks which we have been liking for quite some time. This is trading at about 2.1 times adjusted book basis, with a target price of 1100.
Which is the stock that you like in the PSU space, Pankaj?
So within banks, we like State Bank of India, Bank of Baroda, and Indian Bank. And see,
Okay.
when you sort of look at banks, we have seen PSU banks correcting 15, 20 odd percent if you sort of
Right.
exclude the Friday's move. And
Mhm.
private counterparts have sort of corrected 10 to 12 odd percent. So I think we have seen sharper correction in PSUs, and I think one also needs to sort of take into account that that if the direct tax collections are going to be good, then probably it might put pressure on yields, and which may not, and which again will have a positive rub off on the PSU banks because they hold typically higher debt or G6 compared to say private counterparts. So that way, I think that's another positive. And I think not every PSU bank had exposure to Adani group of stocks, but I think all of them had been sort of beaten in a similar fashion. I think if concerns are receding on Adani group of set of stocks, I think PSU banks should make a comeback.
And yes, we saw a very good recovery in PSU banks in the Friday session with SPI gaining around 5%. So let's talk about the hidden gem. So, which is the stock that you have brought for our viewers this time?
So it's not a hidden gem; it's a more of a forgotten gem. So we all know that HDFC Bank has been a very stable wealth creator for one of the longest periods of time. Now, last few months, this stock has not really been sort of performing on expected lines. But we feel that now the time has come for this bank to sort of do well. So here our target price is 1920. Now, one is the bank is focusing on physical and digital capabilities to sort of get more customers and drive business growth. So overall, we are expecting advances to grow at about 18 odd percent, and there is nothing to complain in terms of CASA being at 44%. They've got quite superior efficient ratio. So cost to income ratio is below 40%. Their underwriting skills are the best in the industry. Now, obviously, one of the concerns or the anxieties have been the merger with the parent. So our sense is that anxiety is also sort of nearing end. So probably Q1 FY24 is where the merger will become effective. And post this merger, I think what we are also sort of expecting is that the share in the MSCI probably could go up from 6% to say 13 odd percent. So we would expect a good amount of sizable inflows into the stock. And since the stock hasn't really sort of performed so well, so our sense is that the benefit of incremental flows in a big entity like HDFC Bank should benefit the stock. And compared to historical valuation, this stock is trading at quite an attractive valuation of about 2.4 times adjusted book. So I think all things put together, probably this is a good time to sort of lap up a known gem or a big gem, which has been known in the market for a quite long period of time, and which
Right.
is why I feel that HDFC Bank from current levels is looking good.
So the forgotten gem or the hidden gem for this week is HDFC Bank, target price of 1920, an upside of 19%. So Pankaj, next week is a truncated week with the Holi being there. How do you see the markets to pan out? Can we continue the rally that we saw this week?
So one is we are still expecting range of say 17,200 to 17,800. But market sentiments have definitely turned bullish or a lot more brighter because concerns are receding around our Adani group of companies to a good extent. And tax collections have been good. While there are no major data releases to sort of provide direction to the market, but I think whatever we have seen in terms of domestically, probably that sentiment will help the markets recover to say 17,800 kind of levels next week.
Okay.
So that way, sentiments from extreme bearishness or from extreme oversold position have turned quite good. So from that perspective, we would expect an extension of a move of Friday even to next week as well.
Pankaj, thank you so much for being with us, and we wish you and your team a very happy Holi.
I wish all the viewers and listeners a very happy Holi.
Thank you so much.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.